What if I told you the biggest threat to your trading account isn't the market? It's you. Every chart, every candlestick, every strategy, none of it matters if your mind isn't right, because 90% of traders fail. And the reason? They lose the mental game. This video will uncover the hidden psychology behind successful trading and why most people never make it. Stay with me, because this might be the most important financial video you'll ever watch. Over 90% of day traders lose money in the first year. Let that sink in. More than 9 out of 10 people who jump into the markets fail. Not because they're lazy, not because they lack intelligence, but because they underestimate their own psychology. Let's take Jake, 22, fresh out of college. He reads r/Wall Street Bets, sees someone 10x their money on options and thinks, I can do that. He YOLOs into Tesla calls, wins big once, gets hooked, then loses it all. Not to the market, but to greed, overconfidence, and lack of discipline. Sound familiar? If the stock market was a casino, would you still walk in thinking you'd beat the house? Think again. Fear and greed dominate every trade. You see a stock going up, you FOMO in. It dips, you panic sell. You just bought high and sold low. Again. This cycle isn't just emotional, it's predictable. Here's a hard truth. No one controls the market, but traders often act like they do. They think if they just tweak their strategy one more time, it'll work. But the issue isn't the strategy, it's your mindset. In investing, what is comfortable is rarely profitable. Robert Arnott. Comfort is the enemy of progress. Before they trade the market, they trade their emotions. Discipline is their edge. Example, Paul Tudor Jones, a billionaire trader, once said, "The most important rule of trading, play great defense." They don't chase every opportunity. They follow systems, they journal, they walk away when it's time. Amateurs ask, how much can I make? Professionals ask, how much can I lose? Risk management is everything. Without it, your portfolio is a ticking time bomb. Real wealth isn't built on one good trade, it's built through consistency. You're not here to be lucky, you're here to be legendary. If you made $1,000 today but gave it all back tomorrow, was it really a win? The 4 pillars of a strong trading mindset. 1. Self-awareness. Know your weaknesses. 2. Discipline. Follow rules even when it's uncomfortable. 3. Emotional regulation. Stay calm under pressure. 4. Patience. The right trade is worth the wait. Write these down. Tattoo them on your desk if you have to. Imagine 2 traders with the same strategy. One panics and deviates when the market dips. The other follows the plan. Same tools, different outcomes. That's trading psychology in action. Meditate for 10 minutes before the market opens. Set max daily loss limits. Keep a detailed trading journal. Review your losing trades with brutal honesty. These are the habits that separate gamblers from pros. Apps like Trading Journal or Edgewonk Mental Rehearsal. Before big trades. Tracking emotional triggers. Boredom, FOMO. Revenge trading. If you rage quit after one red candle, it's not trading, it's emotional cardio. Most traders won't apply this. They'll hear it, nod, and keep doing the same things, because change is hard. But here's your edge. If you master your mind, you're already ahead of 90%. But wait, what if I told you? Even good habits can keep you poor if you don't avoid some critical mistakes. We'll talk about that in my next video. Watch this next. 7 things to avoid if you want to be rich. It's the perfect follow-up to this video. Click it now. Don't let another mistake cost you your future wealth.